Hello everybody, I'm Cantonese Cats. Hey everybody, Cantonese Cats here. I'm going to spend a little bit longer time here today. Talk about a very important topic here. It's very, very important for the market because it's been talked about a lot and there's a big debate about this. Is there going to be a 4-year cycle for Bitcoin, cryptocurrency, which would also link into the overall market? Does this current bull market only last until November or December? Do you have to get out soon within a matter of 3 or 4 months because there's going to be a strong bear market that's going to come? Because 4-year cycles always happen because November, December time, every 4 years is going to be the top of the cycle. Let's talk a little bit more about that. Or are we going to have like a super cycle where there's not going to be any cycle left? Are we just going to end up having Bitcoin stabilizing, just keep going a little bit over time? And there's not going to be that big of a drawback? I don't think so. I think cycles are still going to exist. But to think that it has to be a 4-year cycle, I'm never going to tell you exactly what I think is going to happen. I have an idea. I'm going to tell you back with a lot of different points here today that I don't really believe in the 4-year cycle that faithfully. I believe in liquidity. I believe in the market momentum. I believe in market symmetry when it comes to technical analysis. I believe in cycles, but I don't really believe in the 4-year cycle. It has to play out the exact same time over and over and over again. Now, people might say that for me to think and feel that way is dangerous because if that turns out that the 4-year cycle is what's the truth here, then we're going to end up having a lot of people getting rug pulled, and there's going to be a lot of dismay. People are going to end up being backholders, round tripping all the gains that they had, and that they're going to end up just basically missing out the opportunity to take profits, right? But as far as I'm concerned, I'm going to present a lot of different evidence here to tell you that yes, to think differently is dangerous. You need to follow the indexes, follow what Bitcoin's been doing, follow what IWM, which is Russell 2000, the small caps, what they're doing, following sentiment, following a lot of these different really risk-on stocks to see what they're doing, following the Nasdaq, following what China is doing, following gold, following US dollar, following a bunch of stuff. I'm going to go through every single one of this. The first thing I'm going to go through is the IWM. I keep on talking about IWM for the last 2 years because it's a very, very important index when it comes to risk on sentiment, when it comes to risk on assets actually doing very well. IWM is Russell 2000 ETF. Russell 2000 represents the small cap stocks in the US market. The small cap stocks are going to be the most sensitive to debt and going to be the most sensitive to basically liquidity because these are generally not as well established. They usually hold a little bit more debt. They usually just a little bit more like your economically sensitive stock, I should say. And generally, they're very cyclical. And just look at the monthly chart here for IWM, which represents the Russell 2000. You can see how cyclical it has been. Cycle 1, 2, 3, 4, and maybe we're starting another cycle here over the last couple of years or so. It's been having its ups and downs. This is a lot more economically sensitive than, let's say, the SPY. SPY generally just goes up in a straight line for the most part. The reason why that is because index funds get bought up by 401k. People generally just end up keep on having a stable buy over those large cap stocks. And also large caps companies are generally a little bit more stable. They have more cash. They don't have to worry about the economic stress as much as these small caps. So look at the cycle itself. One thing that is very, very apparent is that they generally follow liquidity. If I pull up the M2 liquidity index here, price up top here with the monthly candles and the M2 global liquidity index down here below. And I don't really have to draw too many things. I just want to draw some rectangles here. I'm going to look at mostly over the last 2 or 3 cycles or so. You can see how whenever there's an exhaustion or bear market coming for the Russell 2000, in general, you have a hard time with global liquidity going up. Global liquidity here from 2014 to 2016 has been underneath a lot of horizontal resistance here. Now, it is not until it broke that resistance and back test that resistance is when we're able to have a run up in global liquidity, and in consequence, you have an increase in price in IWM together with it. Same thing happened the time over here from 2018 all the way to 2019. And you can see how there is a time where global liquidity is having a hard time breaking out above this horizontal zone. As soon as it broke out and more or less kind of back tested that zone over here, that's when you are able to solidify this sideways bear market, and you end up going up together with global liquidity to form an all-time high, right here to form an all-time high. What do we have here so far? We got a little bit of a different picture here. What is this different picture? Well, you see how this is about 2 years. This is about a year and a half or 2 years. So far, this has been lasting for at least 2.5 years over here. You can see that global liquidity's had a hard time really kind of break out here for a long time, ever since January of 2022. Hit a top of the global liquidity here. Top right there again, got rejected. Top right there again, got rejected. That's already been 2 years. This is extended to about 2.5 years. Finally broke out, back tested about 3 years later. This is about 2 years. This is about 2.5 years. This cycle is just longer. The base formation is just a lot longer. The cup and handle, the cup is just a lot longer than the previous cups. As you can see, this liquidity cycle overall is just longer based on looking at global liquidity. We finally had the breakout of global liquidity here in December 2024. We did end up having a narrative-based tariff scare over here that had deleveraged a lot of people as global liquidity was going up. Very similar to what you're seeing here during COVID, when you have a big giant drop here with the IWM price when global liquidity was going up. I think we're getting ready to kind of have a very, very similar setup where there's a mismatch in global liquidity and price, and price is simply kind of playing a little bit of a catch up here. Now, in addition to looking at an M2 global liquidity, I also want to look at a couple other indicators here too, as time and time again has been playing out with these indicators. First of all, this is the monthly Ichimoku cloud. All you need to know is that the cloud, as well as these lines and blue line, red line over here, are going to serve as support and resistance levels. In pretty much every single cycle over the last 2 cycles at least, or 3 cycles at least, you have basically a run up for an all-time high, and then invariably you're going to end up having to back test the cloud here. It just kind of barely touch the top of the cloud here. Here it's just barely going to touch the top of the cloud here. It didn't really quite touch the top of the cloud over here in December 2018, but eventually during COVID we were able to flush down into the cloud, through the cloud, but this was obviously very much of a V-shaped recovery and got back on the cloud, and the rest is history. Most recently in 2023, we basically touched the bottom of the cloud over here. 2023, top of the cloud, bottom of the cloud, all of these have been tested. This is a second test here in April 2025 with a narrative scare that tariffs is basically going to tear the entire world apart. The entire world economy is just going to go to crap. Didn't turn out to be the case because it was all narrative based. It was all based on what one person or one administration was doing. This is not really a true global threat, and that person actually is quite sensitive to what's going on in the overall economy anyway and sets economic policies. And guess what? Turns out that it was just kind of all political gesturing. Turns out that we are doing okay. So we have a V-shaped recovery. Touch the back of the cloud over here, very similar to previous cycles, right? So far, there's really nothing tells this cycle is really any particularly different compared to the past, especially during COVID. The other thing I also want to talk about is the Bollinger Band. Whenever you have reached out with an expansion of Bollinger Band, things get a little bit too far overextended for quite some time, months on end. You're going to having a cool down here. You break about below the 20-month moving average. You're going to touch the lower Bollinger Band here. And whenever you touch the Bollinger Band here, sometimes it consolidates sideways here for quite some time. And then eventually you might end up having another like double touch near the bottom of the low Bollinger Band here. Previous cycle over here, 2015, 2016, did that twice over here, did it very quickly, and then just ran up from there. 2018, 2019, 2020, spaced out a little bit longer, right? Touch the bottom of the Bollinger Band, touch the bottom of the Bollinger Band here again, overextended below it. That was the volatility that was needed to really slingshot the price up a lot higher. So far this cycle, it had touched the low Bollinger Band how many times? Once, twice, 3 times. Got closer the 4th time. Got really decent liquidity down here below. Deleverage a bunch of folks down here below that think that, hey, Trump's in office, we're just going to keep going up a lot higher from there. And end up not working out if you are very bearish down here below, because this is just a liquidity grab. This is just a big giant rapid flush over here. Nothing really had happened, and next thing you know, we reclaim the 20-month moving average. It looks like this thing wants to keep going up higher. I think that we, with a flush down below or get close to the low Bollinger Band here and a reclaim a 20-month moving average, this is very, very bullish. It got close to the low Bollinger Band here, reclaim the 20-month moving average. This is very, very bullish. Bollinger Band squeezing over here, but starting to kind of expand here a little bit. Bollinger Band squeezing over here, starting to kind of expand here a little bit. I think we might be getting ready for some pretty decent move up here. Now, whenever you have a decent move up here, a lot of times it can last longer than you think. This bull market over here technically really started down here, but I'm going to say that, hey, if you say that once it finds solid ground here on 20-month moving average, it took at least months number 1, 2, 3, 4, and even after that, you have a few months of up here, and the wick up here was the final, peak for the IWM. And what you're seeing here is maybe we're getting ready for that big move because we also just had a touch of the low Bollinger Band flush down a lot of liquidity, deleverage a lot of folks, margin call a lot of people, and also just screw up all your options. And then we reclaim the 20-month moving average. Looks like we might be getting a very, very similar play over here. We will see. Finally, I want to show you one thing here, which is basically looking at the Fibonacci levels. I want to do a log fib here. I'm going to do through one cycle here at a time. Looking at 2015, 2016, you have a flush down all the way down here. And it's not until it broke about the 0.886 over here, that's when you start to have this, kind of all-time high crazy move up here, right? Now, back in the COVID time, or even before that, let's just do that before the rate, scare, before the terror scare around in 2018 or so, to COVID low over here, if you do it from cycle high to cycle low, you can see that whenever price finally broke about the 0.86 is when you have this God candle, and then you just end up having a huge movement on the way up, right? So the 0.86 seems to be a pretty important level here. What are we at right now? Well, we had a false breakout above the 0.86 with just one candle here. That turned out to be just a fake out, a shakeout, if you will, because we had to do this liquidity grab all the way down here. Back down even close to the 0.236, 0.382 here. And we eventually kind of over the last few months broke back above one of these levels here at a time. 0.5 has been reclaimed, 0.61 has been reclaimed, 0.786 here has been reclaimed. I think we're going to challenge the 0.86 here fairly soon. And whenever we end up breaking about the 0.86, I think we're going to end up just trending up higher to hit some of the higher targets up here above. How high are we talking about here? Well, it depends, on what you're thinking. Here, the cycle got at least close to 1.618. Didn't really quite get there, but it got close to 1.618 here. So theoretically, if you talk about IWM getting to 1.618 here, maybe $315 is possible. Why am I spending so much time talking about IWM? Because it's very important to talk about cycles to look at that, because IWM is basically very, very much mirroring the Bitcoin cycle. And I think a lot of people care about Bitcoin more than IWM, me included. But a lot of people are basically neglected the fact that if you cannot just look at one thing in isolation here, you have to kind of put everything else in context here. So if I'm going to put this two kind of side by side over here, and going to try to give you a little bit of a better idea in terms of what I think is happening between the two, you can see that if I just kind of zoom in here a little bit more with Bitcoin, you can see that these liquidity cycles are basically identical. They may not play out the same, but the timing of these liquidity cycles are more or less identical, right? Highs up here, highs up here. The previous all-time high in November 2021 for IWM was also the previous all-time high here for Bitcoin. Same thing with the liquidity grab over there, down low March of 2020. The high over here is a little bit off sync here, with IWMs lasting a little bit longer for a few more months. But for the most part, these cycles are playing out very, very similarly, especially during this last cycle in terms of how time synced it is. And it is because both of these assets are extremely sensitive to global liquidity. And global liquidity, I just showed you, are going through cycles. And that's why these assets here are also going through cycles. Focusing a little bit more on Bitcoin. Now, talking about Bitcoin here, you can see that it has been going through these cycles here over and over again, and this can be, and no pun intended, can be charted with a Gantt square on the monthly. And this is based on 45-degree angle, and all these horizontal lines over here are also based on Fibonacci levels. It is a way to tell how price maneuvers through time and space, and also to tell you how price is behaving based on market symmetry. It's been hitting arc after arc, got rejected here. Once you push through and backtest it, it goes through the next arc up here, got rejected. Once you push through and backtest here for about a whole year, backtest it and go to the next arc. Once you get rejected here, come back down, backtest that for about half a year. Where is price going to gradually up to? Probably going to at least a horizontal line over here around 200,000, if not up here to the arc up here around, depending where it hits, anywhere from 700, 800,000 to 500,000 or so, depending on where it ends up hitting up here on this arc. This whole market symmetry is not really done by accident, because if you're looking at the whole Bitcoin cycle, has been mirroring the M2 Global Liquidity Index Fund here, or index here, which shows you how much global liquidity there is in the world. It's been mirroring that extremely well, right? Bear market, again, you have a hard time breaking about the resistance. Bear market here, big giant cup, you have a hard time breaking about the resistance. It's not until you break through and have a back test, that's when you have the parabolic bull phase for Bitcoin. It's not until you have a breakout and a back test here, is when you have the parabolic move here for Bitcoin. So far, we've had a very long liquidity cycle over here for about 2.5, 3 years. Finally broke out, back tested, and that's when we're maybe having a little bit more parabolic move for Bitcoin here coming soon, based on market symmetry and also based on M2 liquidity, index. Now, to also talk about Bitcoin, do I think that Bitcoin is done? The answer is no. There are a couple of reasons as to why I think that is. Whenever price is just above the monthly tank and the blue line here you're seeing, such as when it was during the 2015, 2017 bull market, it's just been riding the blue line all the way up as a huge parabolic bull cycle. It's not until it broke down underneath the blue line here and got rejected, that's when you hit the bear market happening. Same thing over here. This one actually just kind of went straight up here. It did touch the blue line on the way up here though, but eventually after you start to have a little bit of weakness, when it starts to actually break down underneath the blue line, that's when things really got exhausted. It had a little bit of an exhausted low, higher high over here, but eventually broke down back underneath below the blue line here, and eventually end up having a bear market. We end up reclaiming the blue line here fairly soon. Ever since March 2023, it's been forming higher highs and higher lows up along with the blue line. We're not that too far overextended about the blue line. It looks like blue line is being tracked up here. This is not bear market behavior. This is bull market behavior, as far as I can tell. One very different thing so far during this bull market here, and I think, again, it's very dangerous to think that things are different this time compared to before. Really, over the last few bull cycle here for Bitcoin, you have a parabolic move and you have a full Bollinger expansion that goes all the way down to the negatives. The impulsivity of the parabolic move basically dictates this full Bollinger expansion. That happened every single cycle before the two. We haven't really had the true Bollinger expansion quite just yet. You can claim that we have an initial Bollinger expansion over here, which again is the very same thing that kind of happened over here in 2015, 2016, but that wasn't really the true, bullishness here. We ended up having a little bit of Bollinger contraction over here too. So as far as I can tell, I don't think we really had that parabolic bull move here for Bitcoin. And to think that things are different this time may be a little bit dangerous to kind of, think about, because this is really the first time Bitcoin is behaving this way. I'm not saying that you're going to end up having necessarily 100%, you're going to have having a parabolic move up here. It just kind of brings the question in terms of what might be happening. Same thing here too. Price has basically gone sideways here for about 2 years, a year and a half, 2 years. Here, price also kind of gone sideways over about about a year and a half or so. And you can see that eventually you got to a point that Bollinger starts to contract. But as long as the contractions start to decelerate, as long as you have a little bit more of like a flattening here on the Bollinger Band, it looks like it wants to start expanding a little bit. That's when a parabolic move up. We are having a very, very similar morphology where you have the Bollinger contraction here, but the contraction is starting to decelerate as you're starting to kind of fan out this Bollinger Band here on the lower part. That does make me wonder whether or not we end up having a little bit more parabolic move here for Bitcoin on the way up. I think it's entirely possible that that's the case. Final thing I want to talk about Bitcoin, very, very important thing to talk about for Bitcoin, is the Bitcoin dominance. I wanted to show you that the Bitcoin top here during this cycle is around December 2017 to January 2018, somewhere around there. And that's when Bitcoin dominance starts to plummet down here below. Same thing here, where is the top for this cycle? The top of the cycle is around November of 2021. That's also when Bitcoin dominance over here has also plummeted down here. Now, what I mean by Bitcoin dominance is the percentage of the entire cryptocurrency market cap that belongs to Bitcoin. During a euphoria type stage, you are going to have Bitcoin liquidity to rotate out of Bitcoin to other things, including all kinds of weird altcoins, as a risk on sentiment. And as a result, Bitcoin dominance will drop during these cycles. How long this Bitcoin dominance drop during that bullish phase of the cycle? It takes a while. Let's see, from March of 2017 here, with a significant drop here for Bitcoin dominance, all the way down to January 2018. This process took about 10 months. Here, the peak of the Bitcoin dominance here around January 2021, and it did end up making a little bit of low highs and low lows all the way down here to around January 2022. The entire process here took about a year. Took about a year here, took about a year here. How long have we had that Bitcoin dominance drop, assuming that this is the Bitcoin top or Bitcoin dominance top here? How long have we had that drop? 2 months. We're in the middle of the second month. These things sometimes take time to play out. Does the cycle end in November, December? It can very well be possible, but I just don't really want to assume that things are different this time. I want to just think about this and think that if Bitcoin dominance is going to drop because it's been exhausting on the way up over here, it's finally having a change of character here. It broke down underneath the 0.618 here so far, right? After getting challenged and rejected here, 0.786 here. So there's a weakness behavior here. It looks like Bitcoin dominance wants to keep dropping down. And if it ends up doing that for the entire year, that means that the cycle could last longer than what we have anticipated for November or December 2025. I just never want to assume that things are different this time. It just doesn't really seem to, be something that I'm seeing here. Now, I want to talk about, and I promised you I have maybe another 7-8 points to go, but they're going to be a lot faster. This is going to be a little bit longer talk here as well. I made a video that had a ton of views about stocks that are palantiring. The current bull market for the stock market has really been on the backs of this Wall Street darling called Palantir. This is a monthly chart Palantir. And what I mean by palantiring is that whenever stocks break above a certain level, and if they end up having a monthly Bollinger Band expansion, a really impulsive and parabolic move could happen. And it's not a guarantee, but basically, look at Palantir here. As soon as it broke above the 0.786 and 0.86 over here on the log fibs, and as soon as you have that Bollinger Band expansion here, to the upside as well to the downside, the rest is history. You have a full Bollinger Band expansion that went all the way down to the negatives. It's still expanding here, by the way. And also the upper Bollinger Band is also continuing to expand, and price continue to ride up along the upper Bollinger Band here for quite some time after this breakout over here for about a whole year. This is what I mean by palantiring, and I was presenting to you guys in terms of a lot of various candidates. Now, before I do that, I also want to show you why I think this is a bullish market, because you remember Cathie Woods. You remember the ARK Fund. The ARK Fund is really what was the risk-on kind of crazy high-debt companies, supposedly innovative companies that Cathie Woods put on his ARK index ETF, right? What you're seeing here is I'm seeing some very, very similar setup here. You have a 20-month moving average going up, and you have a full Bollinger Band expansion here on the monthly. This looks like it's getting set up for a more parabolic move on the way up here. And in addition, it also has broken inside the monthly Ichimoku cloud. Looks like this thing wants to go up here minimally to the upper part of these Ichimoku cloud here. There's a lot of risk on sentiment behind the scene here. And so far we got rejected here off of the monthly Gann arc over here, but we're working on it. We end up closing a month above the Gann arc. I think we can go up here to the mid 80s or to the 90s in a hurry. And it just looks like it wants to break above because of how impulsive it is. Doesn't mean that we're going to end up getting rejected here for good and form a higher low here before going up. Possible, but again, I cannot really bet against this whole ETF here because of full bullish band expansion and because it looks like it's forming some pretty impulsive price action here. Looking at Fibonacci level, it hasn't really quite hit the 0.618 here quite just yet, and things really are going to start heating up if it ends up hitting the 0.786 and 0.86 up here above. But a lot of stocks that are underlaying that has already started to do that. I'm not going to take too much of your time here because I already talked about all of this previously. The first Palantir candidate that I have here is Coinbase. Why am I bullish on Coinbase? Because the Bollinger Band looks like it wants to start to expand here. Now we do end up having a little bit of a hiccup here because price got rejected from the previous all-time high, and we end up backtesting 0.86, which is working on right now, but we closed 2 months above the 0.86. The 0.786 was breached without question. So at this point, I think something like Coinbase, which is a very risk-on type stock, is looking like it's palantiring. Other candidates include a lot of these, like HPC miners. Iron has also starting to meet the criteria, breaking about the 0.86 or at least trying full Bollinger Band expansion upward and low Bollinger Band here. Other candidates include Wolf, actually is doing very well, though it's hitting resistance here in lower time frame. It is breaking about the 0.618, not quite some of these higher levels up above, but you're starting to have a little bit of Bollinger Band expansion over here. Galaxy Digital is one position that I've been adding and I've been building. You can also see Galaxy is having a little bit of a hard time breaking above the 0.86 over here, but is starting to have that Bollinger Band expansion over here as well. So that's also another palantiring candidate. That's also very risk on stock. Net, Cloudflare, very risk on stock. Broke about 0.86 here, full Bollinger Band expansion. Trying to break about a previous all-time high here. These are very, very risk on stocks here. Robinhood, same thing. You already broke above. You already started palantiring. It's doing hooting. It broke above the 0.86 here without question. The next thing you know, it's just forming all-time high. This is an example in terms of what I meant by things are palantiring and what they can do. Shopify, same thing. It did end up kind of having a little hard time breaking about the 0.86 here, but full Bollinger Band expansion. Okay. Trying 0.86 here. That's another candidate. Another one is SoFi. SoFi is doing the same thing. 0.86 is being challenged, and the full Bollinger Band expansion. You can see the theme here. All these really risk-on stocks are starting to do extremely well. Even a firm has been doing better, breaking about the 0.77 full Bollinger Band expansion here, trying to get the 0.786. It could be another palantir candidate. Even Tesla is starting to look better and better. It's just simply needed to break the 0.86, and I think if it ends up breaking the 0.86 here, you're going to start having maybe a little bit of Bollinger Band expansion here to the downside here too, suggesting maybe this is also going to keep going up here. Roblox is another stock here that Cathie Wood owns. What is it doing? It broke about the 0.86, simply backtesting it, just like what Coinbase is doing with full Bollinger Band expansion. Finally, and another stock here, Futu, doing the same thing, full Bollinger Band expansion. Broke about the 0.86 here. It could be forming some all-time high stuff here pretty soon. All these stocks are looking extremely bullish. Let's look at some crypto here, shall we? Let's look at what else could be palantiring. Well, one candidate that is a pretty well talked about candidate is, I'm not going to use different fit levels here, is Ethereum. Is Ethereum palantiring? Let's look at it. Zoom in here. Bollinger Band expansion to upside and downside, breaking about the 0.86. This is palantiring behavior. Another one that is potentially doing that here is Chainlink. Bollinger Band expansion here is being seen. You can also see that it's trying to break about the 0.618, so there's a lower fit level here. But this is also a potential palantiring candidate. ADA. I shouldn't do market cap. I should just do the ADA USD. Same thing, Bollinger Band expansion is happening. Now again, fit level wise is a little bit lower here. Is trying to break and get closer to 0.618 over here. But with this kind of Bollinger Band expansion here, it's basically telling us maybe a little bit more risk on sentiment here. Just zooming back to others. This is others, which is the cryptocurrency market cap without counting the top 10 cryptocurrencies. So you're really talking about the altcoin stuff here. Even that is looking like it wants to break about the 0.786. And if it ends up breaking that, get to 0.618, I think you're going to having a bullish band expansion over here too to allow price to go up a lot higher. And this is probably as risk on as you can get if the whole like cryptocurrency market cap, without even counting the first 10, like you're not talking about Bitcoin, Ethereum, you're talking about the really trashy stuff. If that's becoming more bullish, then I think the overall market can stay quite bullish for quite some time. What happened the last time when you have something very similar happen, you end up having a very prolonged bull market for the others chart. As soon as it broke about the 0.786 and you already have a full bullish expansion here, and the bull market just kept going up with these crazy green candles here. A lot of people got a lot of money out of this. Now, you can say, look, that's great and all, but looking at this, it just looks like a parabolic move. It looks like you're going to have a blow off top. And I'm going to tell you, I think blow off top is unusual. Blow off top is actually very, very, very unusual behavior, and it's sensational. That's why everybody remembers it. But in general, stocks don't top with blow up top. This is Nvidia. Nvidia had one blow off top that I'm seeing here. All the other cycle usually shows you a little bit of a trend exhaustion here. I'll tell you what I mean by that. Looking at trend exhaustion, it's best to look at RSI here. You get a little bit tired here with some bearish divergence, makes another last hurrah kind of thing. But you're already showing some signs of exhaustion here. So that was the cycle top there. Here, it's been going up here on bearish divergence. This is not a blow off top. You already knew that things are going to get a little bit more dicey there. Over here, during this bull market from 2015 to 2018 or so, the entire thing was going up overbought, but that's okay. You can stay overbought here for a very long time. The only thing that was an issue was that this is an exhaustive move on the way up with bearish divergence. Over here, what do we got? We got a blow off top here, right? Well, you can say that, but price has been going up on equal RSI here. It was getting a little bit exhausted here too. And having a blow off top, again, I'm just showing you examples. Having a blow off top like that is rather unusual. What happened with the recent top over here? Well, we got a little bit of a bearish divergence. That's why you have a reset here. So I don't necessarily think that blow off tops are really anything that you should just say is going to happen, because it's not. I just want to say, like, it's not. Even for Tesla, right? Tesla had a blow off top, right? It went so crazy so fast. No, it didn't. It never had a blow off top. It shows you signs of exhaustion and lets you get out before it tanks or goes sideways for years. Looking here, you form a higher high here on from 2013, 2014, even though this looked like a parabolic move up, but when you look at log here, you can see that it's exhausted with RSI really completely exhausted, right? That was a sign that the cycle has topped. Here, you can see that price continued to go up on bearish divergence here, and it just kept on making another move up here, right? All of this stuff was on bearish divergence, and that was basically showing you signs that this is very much of an exhausted move up here. What do we have here so far? Do we have an exhaustion here looking at Nvidia? We do not. We do not really have that. Now, with that said, we did end up having a little bit of a bearish divergence here, which is why I'm like not really that much big into Nvidia. But looking at all the stocks that are palantiring right now, look at Palantir itself. Do we have any signs for exhaustion? Full bullish expansion. RSI is going up. There's no sign for exhaustion here at all. Could this be a sensational blow off top? Maybe, but currently there's really no signs for that, right? If you're looking at Tesla, if you're also looking at the Bollinger Band, the Bollinger Band also tells you more or less where the top is over the last two bull cycle. The top over here was February 2014. If you look at the bottom of the Bollinger Band, when did the Bollinger Band start to contract? Really, for real, February 2014 was the peak of that Bollinger Band, right? Looking at the same thing here, where's the peak of the low Bollinger Band here? 2021, January. Where's the top for Tesla? The top for Tesla was not in January of 2021. It was after that. It was when you started to have the contraction of the Bollinger Band. So we're not even talking about like Palantir even having any kind of sign for bearish divergence or any really true Bollinger Band contraction here. And if you're looking across the board on all of the palantiring stocks, including Robinhood, the Bollinger Band just continues to expand. There's no bearish divergence here that's being spotted. These stocks can keep going up. I mean, like I'm just kind of looking at this. I'm like, I don't really see the whole like bull market being ending here. There's really no indication that is going to be the case. Looking at the ARK fund, you have no bearish divergence here. It looks like price can just keep going up. You just started to have a bunch of expansion over here. Looks like this can just keep going up over time. So I don't really buy the notion that the bull market is going to end in 2 or 3 months based on what I'm looking at in the past, because I don't want to say that things are different. Now, I'm getting to the 35-minute mark here. This is an extremely long video. I'm getting a little bit tired myself, but I do want to show you the 7 next thing here really quickly. The fourth thing I want to show you is this. I want to talk a little bit more about the index. And to talk about the index, the best way to look at it in terms of risk on is to look at QQQ over SPY. Usually during risk on moments, you are going to have QQQ, which is the Nasdaq, outperforming the SPY, which is the S&P 500, because the Nasdaq inherently has more tech companies and has more high-risk companies. And guess what? That ratio of QQQ over SPY here on the monthly chart is showing is having a breakout above this inverted head and shoulder pattern. It looks like one's having inverted head and shoulder continuation pattern, or cup and handle, however you call it, doesn't really matter. This is a bullish formation. You have bullish band squeeze here because it's been doing nothing. And now that it's expanding, it looks like it wants to pick a direction and looks like it wants to go up. So most likely QQQ is going to keep outperforming the SPY moving forward. Are we at the beginning stages around here like we did in January 2020, February 2020? Maybe we are, right? You can see that during the entire secular bull market, it's just been going up on a straight line up here. And we're getting ready to do the same. So this is not a bearish thing. I also want to go through one last thing here, which is to look at the SPX on a very high time frame here, because a lot of people are going to keep calling the top here. A lot of people are going to call a major correction like the one that we had in 2022, which looks so insignificant when you look at it. A lot of people are going to call a crash like we had back in January 2020 because of COVID related stuff. But honestly, it was just a wick here. A lot of people are going to call, these crazy crashes here, which there's currently no evidence for. I'll tell you exactly what I think would happen that would bring on a crash. Honestly, the one big thing that would happen to bring on a crash is if we stay overextended about the 6-month upper bullish band for way too long. Here, 2020, 2021, we stay above the upper bullish band here for way too long. We ended up needing to correct it. Are we above that so far? No, we're holding the 6-month upper bullish band and we're just kind of staying underneath of it. We're okay. Here, in 2013, 2014, we are a little bit outside the upper bullish band. Guess what happened after that? 2015, 2016 sideways crash, right? It looks so insignificant when you look at this, but that's why it happened, because things get over leveraged and overextended. This is a secular bull market because the median line is going up here. Now, what happened here during the dot-com bubble? How many candles do we have outside the upper bullish band? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Is it surprising to you that if we end up having such a crazy move that went up for 5 years, that we're going to end up hitting the median, and that hitting the median is not enough, we're going to have to hit the lower Bollinger Band? No, this is completely expected behavior because we've been over leveraged here for 5 years in a row, right? What happened over here? We are over leveraged, so we are have the 1987 crash as a result. What happened over here? Well, we got how many candles close about the upper Bollinger Band here? 1, 2, 3, 4, 5, right? Around the 50s in Eisenhower years. We even have some that are over a Bollinger Band over here that got corrected, but these are really just overextended. Guess what happens? The whole bull trend got exhausted. We hit the 20 moving period average. Wasn't able to be enough. We ended up hitting low Bollinger Band here again. Are we having that concern right now? I would argue that we have already corrected this move up and we're just riding up a Bollinger Band on the way up. I don't know whether or not we have like a bubble or a crash or anything like that. It looks like the bull trend just wants to continue. And to bet against a bull trend like this, it's like betting against this bull trend up here. It's like betting against this bull trend up here. I just don't really see. Look at what happened here during the 1920s crash, right? You have how many candles outside upper Bollinger Band? 1, 2, 3, 4, 5, 6, 7, 8, 9. Right? It didn't even touch low Bollinger Band. But anyway, I don't think we're in an overextended condition here. I think this is just normal condition. I'm not really foreseeing any bad crash that's going to come because it doesn't look like we're that over leveraged right now. based on looking at the extension of the bullish band. Hang Seng Index, very important topic here to talk about. Hang Seng Index is the index that is in Hong Kong that is now listing the majority of Chinese companies that are going public. You can invest in these Chinese companies publicly through the Hang Seng Index. It peaked in 2008, and then since then, the Hang Seng has just been, unfortunately, it's been a little bit lackluster, if you will. It did make a slight higher high here in 2018, but since then it's just been kind of sad, right? Formed big giant cup here, formed an Adam Eve double bottom over here. But guess what? Over the last 2 years or so, it's just been going high, making higher highs and higher lows on the way up. The reason why I'm pulling up the Hang Seng Index up top and the S&P 500 down below is I want to show you one thing. The one thing is that I was looking for this. I've never really seen where the U.S. market, I've never really seen the U.S. market dumping and having the Hang Seng going up. I've seen the Hang Seng Index dumping and the S&P 500 was holding just fine or even go up. I've seen that, right? Here is an example, right? Where the Hang Seng was going down and the S&P kept going up anyway. Here's another example, right? Where the Hang Seng has really plummeted and the S&P 500 was holding just fine. The Hang Seng plummeted over here, and S&P just kept going up, right? Hang Seng index plummeted over here. The index just kept going up, right? On S&P 500. I guess what I'm trying to show you here is that I'm not trying to get you to buy Chinese stocks, because if you buy U.S. stocks, it is going to end up outperforming Chinese stocks over time. That's been proven over the last 2 decades. What I'm trying to say here is that I cannot really be bearish if the Chinese market looks like this. If the Chinese market keeps looking for higher highs and higher lows, I don't really think a crash is coming for the U.S. market. If I just look at the Chinese market here in isolation in terms of what it's doing, you can see a clear double bottom over here, clear Adam Eve, clear back test of that level. Looks like it wants to keep going up higher. Put the Ichimoku cloud, it's already broken about the Ichimoku cloud and back test what it needed to back test. It looks like it's setting up a very, very parabolic move up here. If you're looking from the previous cycle high over here to the cycle low down here, it's already looking like it wants to get up to the 0.786 over here, which is going to be more or less a big boss here. If you look over here from the 2018 high to the low over here, you can also see it also broke out the 0.618 and it's going high. Now, if it breaks the 0.618, I think most likely it's going to end up at least hitting the 0.786, if not the 0.86. If it ends up breaking above that, that means that you can have some really crazy stuff happening with the Hang Seng. I'm not saying that it is. All I know is that I think there's still got time here to kind of push up above. And the reason why I'm also showing you the Hang Seng is because of this. I really want to show you something here that is very significant, which is not necessarily a comparison to S&P 500, but is the comparison to Bitcoin. Because everybody's saying this is 2021. Everybody's saying that this is the exact same thing as 2021. Let's look and see whether or not this is the exact same thing as 2021, right? We're gonna basically reset this over here. Let me give me a second. Doing a side-by-side view here, you can see the Hang Seng Index is up top, Bitcoin is down here below. What are we seeing here? Let's take a look in 2011. Everybody says that this Bitcoin move over here is basically the same as this, and that we're gonna hit the top here soon around November 2025, and that would be the end of the cycle. One thing here is that there is a huge difference in terms of liquidity conditions between now and 2021. What I meant by that is the Hang Seng Index has peaked up here in February of 2021. Bitcoin kept making more higher highs after that and make another higher high after that. But the Hang Seng Index, the Chinese liquidity was already peaked at February 2021. Since then, it already has plummeted all the way down. And during this liquidity crunch, Bitcoin was not able to push higher. What is different between here and here and here and here is that there's no sign of the Chinese market slowing down. It looks like the Chinese market wants to continue its bullishness in forming higher highs and higher lows on the way up. That means that there's going to be maybe more liquidity that are going to come in the system here, as I've shown you on the previous on the previous like 30 minutes ago about how there's going to be some M2 global liquidity increases, right? We're seeing here with the Chinese market, because of increasing Chinese liquidity coming in, rather than having decrease and declining the Chinese liquidity rotating into Bitcoin, I think that Bitcoin is going to keep going up higher. That's my thesis. This is different. This time is different, but not really different. What I'm seeing here is you cannot expect the market to follow a 4-year cycle if the liquidity condition is not saying that that's going to be the case. I follow where money is, I follow where liquidity is, and I follow patterns. I don't necessarily subscribe to a time, because that's not what I'm seeing here across multiple things. All right, I'm getting a little bit tired, so I'm just going to go through the rest of it pretty quickly. This is gold. This is number 6 here I want to show. If you look at gold, it's been following this Gann square here pretty well. It depends on the ratio. If you look at the, let's see, here's 100. If you look at tan, what happened was back here in August 2020, it finally hit this horizontal Gann level here, which is strong resistance here for gold, right? And August 2020 was really the top here for gold for this cycle, and it went through a bear market that lasted for about 3 years after that, until it broke above this line over here with an inverted head and shoulder pattern, broke up above, and guess what, right? We're hitting a resistance zone. What kind of resistance zone is that? I'm going to show you that a little bit more clearly. If I change it to 100, that's where the resistance zone is at right now. This has backtested the angle over here, and it went through backtest the arc over here and went up to the next arc. I'm a little bit worried about gold. I think gold is probably top. I think gold is top here, a very similar way that gold is top here. And this is a clearly distributed pattern. You have 5 wicks up above. This is very much of a distribution here. I'm not bullish on gold. I think gold is probably topped. What happened last time when gold topped? What happened last time when gold topped here in August of 2020 was when the IWM, the Russell 2000, was about to have its breakout over the next year. When gold topped, liquidity was rotating, you see, from gold to other things, to IWM, to Bitcoin. Actually, Bitcoin also had a very, very strong move up here around the same time, whereas gold just stays stagnant for about the next 3 years. What are we seeing here? Well, gold is hitting a resistance level up here above. I think it's probably topped, right? Kind of like here. What happened over here? Well, IWM basically had a flush down, spent a few months recovering. Looks like it's about to kind of break out and go into all-time highs here. That's what August of 2020 was setting up as, right? Here, what happened? Gold having a hard time breaking it up above. Looks like it's already kind of peaking. Looks like very much of a distribution here. Looks like it's topped. What happened here for IWM? Liquidity flushed down here. Spent the next few months recovering. Looking like it wants to potentially be here at this area here, to be here at this area here. Getting ready for a breakout. That's what it looks like to me. That's number 6. Number 7, a lot of people are talking about the US dollar over the last couple of years. I happen to think the US dollar look extremely, extremely weak, because if you look at a monthly chart here, even without looking at like a Wyckoff kind of thing, even though I do think it's a little bit of a Wyckoff distribution thing, look how similar this is to that. US dollar tend to go down whenever you have a risk on sentiment, whenever you have stocks and crypto want to go up. Is it necessarily going to be the case? Not necessarily. All it needs to do is just stabilize, to be honest with you. I'll show you some samples of that here in a second. But just looking at the US dollar index, DXY, is this bullish to you? No, it broke down and had bearish backtest. This is bearish. I mean, this is as clearly bearish backtest as there can be. If you're interested in other indicators, I can pull up the 20-month moving average. It's downward sloping here. It's an exhaustive move up above. You have a bunch of expansion here. Looks like the US dollar index wants to continue to the downside, but it's simply having a little bit of a bounce over here, back test this area here, getting rejected here so far. This is bearish, which means it's going to be bullish for risk on assets. Now, just to kind of be a little bit fair, let's pull up and see, instead of looking at Ethereum, we'll look at the most traditional thing that we look at, which is Bitcoin, and we can see how the US dollar and Bitcoin line up over the years. So what you're seeing here, if I just happen to line the two up, which I think they're lined up here, is this. what we're seeing here is that you don't have to have the US dollar index plummet for Bitcoin to do very well. All you need is to have the US dollar stabilized for Bitcoin to continue to be up, right? But what happens with the parabolic bull phase of Bitcoin? What happens with the parabolic bull phase of Bitcoin? What happened with the parabolic bull phase potentially coming for Bitcoin? The US dollar didn't just stabilize. Here it stabilized, Bitcoin went up. Here it stabilized, right? Bitcoin went up. Here it stabilizes, Bitcoin went up, right? But the parabolic bull phase for Bitcoin happens when the US dollar plummets. When the US dollar plummets. And it looks like we're getting ready for that move over here. So because of that, I am bullish on risk on assets over at least the next 6 months or so, because it takes time for this to play out. The parabolic move up here took about half a year. The parabolic move up here took about a year. I just don't think that there is that much of a hurry to get worried about the cycle ending. That's another thing I want to talk about. Final things I want to talk about. Inflation. It's been around 2% over the last year. Sometimes it's 3%, sometimes it's 1.2%. Who cares? It's averaging out to about 2%. It's been like that for the last couple of years. A lot of people worry about rates. Rates don't really matter as much because they are just more reactionary to whatever is going on in the economy. And the economy is telling you that it's doing okay. There is a very healthy 2% rise in inflation. And the Fed is going to be more reactionary anyway. You have Jackson Hole coming up. A lot of people worry about what the Fed's going to do. I honestly don't really care about any of that, because the reason why I don't care about any of that is simply because the Fed follows. They don't, they set monetary policy. But even Jerome Powell, even the Fed chairs themselves tell you exactly what they do. They are data dependent. What data dependent means is that they're going to look at how the economy does. And they sometimes look at all these, delayed indicators, all these economic data that they know is crap. Like, they know it's delayed. So what they generally do? They let the market do its thing. If the market wants to ease financial conditions, the 2-year is going to drop. Guess what? When banks were failing, the 2-year was all the way up here in October 2023. That was the peak, right? And as soon as you have the 2-year yield dropping down, even though the Fed didn't really end up cutting rates until much later. I think they didn't really cut rates until like September 2024, which is coincidentally the bottom of the rate of the 2-year yield over here. The market has already eased up the financial conditions for you. That's why banks were not failing anymore, even though the Fed funds rate was higher for longer, stayed stable. But the market has already done that for you. That's why they don't have to do anything. And guess what? They're going to follow what the market is telling them again. The bond market is telling you that the 2-year yield is looking extremely weak. It broke down below a liquidity zone over here, and it's looking like it had a bearish backtest here, wasn't able to push through. Another lick down, formed a lower low. Trying to push through back above of the previous liquidity zone over here, was not able to break above. This looks extremely weak here. I think the 2-year yield is going to plummet. 10-year yield is a little bit stronger, but even then, if you look at the 20-month moving average here, the trend is your friend, and the trend looks like it wants to change this trend, because the 20-month moving average here is flattening. It's becoming weaker and weaker and weaker. It looks like it wants to just drop down. If the yields are telling the Fed that the market is thinking inflation is not that big of an issue, we should be fine, then as far as I'm concerned, I'm not really that concerned about what the Fed is going to do here. I think they're going to listen to the market. I think the yields are basically telling, especially the 2-year yield here, is telling you what's going to happen. Inflation is also telling you what's going to happen. I don't care about like a single PPI read. Like that really doesn't bother me at all. I think you really have to listen to what the market's telling you rather than looking at these individual isolated inflation data. I don't think that matters as much. I think what matters as more is what the bond market is telling you than anything. And the bond market is basically suggesting that you're going to end up having the yields going down and the Fed's going to cut rates and the market is ahead of it. And that's why we've had, stocks just keeps on going up higher, making higher highs and higher lows over time. And thing number 9, you've already gone through all kinds of narratives. I'm running out of narratives to talk about. COVID, where the entire economy shuts down, did not bring down the economy. You're talking about banks failing, and that also didn't really, pull down the economy. They're basically behind the scene letting the market do its own quantitative easing by looking at the 2 years just kind of plummeting over the last 2 years. You're talking about having the third major agency downgraded the U.S. over the last, 15 years, 10 years or so. It's happened before. Everybody got freaked out. Nobody cares anymore, right? Fitch and S&P already downgraded us many, many months ago. It was already priced in. And you have also got a ton of other narratives that have already been priced in here too. Nobody cares about the Middle East conflict. Nobody cares about Russia, Ukraine anymore. We probably should care more, but honestly, nobody cares, except for selected people who have stake in it. We should probably care more, but we don't anymore because it doesn't seem to be affecting the stock market. This is the second time we have tariffs. We've had it on the first term from Trump. This is the second time. We already had the deleveraging. The market's already priced that in. And it doesn't look like a whole heck of a lot of things are happening, right? Inflation, I just showed you. I'm not that worried about it. What are things? Rates, yields, we talked about that too, right? On top of all that, you're talking about bubble valuation. A lot of people are talking about like valuation, bubble. I just show you, I don't think the S&P 500 is that overextended. We've also already had deleveraging that happened back in April, right? We already had the deleveraging for the S&P 500 and the QQQ back in April. You had the S&P 500 dropping by a significant price. The S&P 500 dropped 21%. The Nasdaq dropped even more. The Nasdaq dropped from the top over here down below 26%. Great deleveraging has already happened. And it has shown great resilience because the market doesn't really care about these narratives anymore. So the more speculation you have about bubbles and valuation when that's not what the charts are showing, that's not the liquidity conditions are showing. If you have increased liquidity pumping in the system, it's going to feel like a bubble, but the money has to go somewhere. It's going to have to pump into somewhere. Eventually, the party is going to end. I'm not seeing that there's a trend exhaustion here that's going to end anytime soon. I don't see any potential thing that is telling me that it's going to end in 3 months. So I don't really know, what the absolute 4-year narratives are necessarily coming from. And then finally, I'm going to just show this one thing and I'm going to be done talking, is the AII sentiment survey. We're in the month of August. We've had a green candle for the S&P 500, Nasdaq, Russell 2000, Bitcoin, Ethereum, Doge. We've had a green candle for ARK funds. We've had a green candle across the board. But the sentiment's horrible. How many people are bullish on the stock market over the next 6 months? Less than 30% of people surveyed on Wednesday. There are more people that are bearish on the market at all-time highs than there are people that are bullish here at all-time highs. Are they correct to be bearish? I don't know. Certainly seemed a little bit extreme, doesn't it? I don't know how the market makers do this with all-time highs, but people getting bearish, but they're doing a dang good job at it. And I applaud them. To take a step back, this is already like a 1 hour video. I don't care. You're going to listen to it. You're going to listen to it. I don't care if it's 1 hour. If I have things to say, if I want to talk about things, I don't care if it's 1 hour. 4-year cycle. What are some of the things that are going for it? Let's talk about it. What are some of the things that are going for the 4-year cycle? That's going to make it happen, because it's happened again before, and that's why it's going to happen again now, right? That's what the argument is. Has Bitcoin always followed a 4-year cycle? More or less, you can say that. I think it's fine, but the only thing is if you're based your investment thesis based on time rather than liquidity, I think you might run into a little bit of a trouble here. If you're basing your investment thesis based on the fact that the bull market cycle is going to end at 48 bars, for example, which is going to put you in November 2025, because it ended at 47 bars and 49 bars before that? Is there enough sample size? How long did it take for you to break from this arc up here? About like what, 7 months, 8 months, right? What about the time before that? From here to there, it take about like 2 years. Does the 4-year cycle have to play out, or is this just happen to be coincidentally 4 years based on liquidity conditions, based on IWM? We don't know, right? It's just time. That's the argument. When I'm looking at everything else, I'm talking about liquidity conditions, how the economy is doing. I'm looking at the indexes, S&P 500, QQQ, Nasdaq, Russell 2000. Based on looking at the market symmetry of Bitcoin, looks like there's more room to go up. Based on looking at the sentiment, looking at gold, looking at China, looking at the US dollar, looking at everything else, that is telling me that there's probably going to be further bullish continuation. I'm not sure if I subscribe to the 4-year cycle. If I'm wrong, I'm wrong. I am not an absolutist. I am open to be wrong. I am just presenting 10 arguments that might make it feel like if you think that this cycle is different, it's dangerous to say so. If the argument is time, then so be it. But I have presented you a lot of other arguments on top of it. And I also agree with the folks that are saying that it's dangerous to, or it's dumb to expect that this time is different based on not time, but liquidity conditions and where we are in the economic cycle. Thank you so much for listening to this whole hour video. I'm tired. I'm going to drink some tea. I'm going to let you go. Have a good one. Bye.